Hey there. Ever glanced at a stock market table and just seen, well, a jumble of tickers and numbers? It can feel pretty confusing. But today, we're going to crack that code. We're going to turn that list into a fascinating story about money, innovation, and the day-to-day drama of the market. Let's dive in. Yeah, I get it. At first glance, it looks like a wall of data, right? It can be super intimidating. But trust me, every single number you see here tells one part of a much, much bigger story. And we're about to break it all down piece by piece so you can read it like a pro. So here's our game plan. First, we'll decode the data, learn the basic language. Then we'll meet the heavyweights, the giants of the market. After that, we'll scope out the day's biggest winners and losers. We'll even compare two different tech companies to see what their numbers are really telling us. And then we'll wrap it all up with the final snapshot. All right, section one, let's get into decoding this thing. To really understand the story, you gotta learn the language first. So these are the key columns you're gonna find in pretty much any stock table out there. First up is price. This one's the most straightforward. It's simply what one single share of a company costs at this exact moment. So, for example, if you wanted one share of Tesla right now, it would cost you $454.53. Easy enough? Next up, we've got change. This tells you how much a stock's price has moved around during the day. Green means it's up, red means it's down. Now, you'll see a dollar amount, but the number you really want to pay attention to is the percentage. Why? Because a 2% gain is a 2% gain, whether the stock is $40 or $400. It kind of levels the playing field so you can compare everything fairly. Now let's zoom out to the big picture, market cap. This isn't the price for one share. This is the total value of all of a company's shares put together. You can basically think of it as the company's total price tag. It's the quickest way to see how big a company really is in the eyes of the market. And finally, let's touch on a slightly more advanced metric, the P/E ratio. That stands for price to earnings. In simple terms, it just compares the stock price to how much money the company is actually making. It's a really quick way to get a sense of whether a stock is maybe over or undervalued compared to its actual profits. And we're going to see why this is so important in just a minute. Okay, now that we've got the basics down, let's put them to work. In section 2, we're going to use that market cap idea to find the true heavyweights on this list. And this is where those numbers start to tell a really powerful story. I mean, you have Tesla, which is a massive company valued at over $1.5 trillion. Then you have Intel, a name we all know, at $193 billion. But then you have NVIDIA, and it is just in a league of its own. Just let that number sink in for a second. $4.464 trillion. A number that big tells us that investors see NVIDIA as one of the most valuable, most important companies in the entire world. This isn't just a big company. We're talking about a true market titan. So that's the story about size. But the market also tells a story about action, about volatility. And for that, we turn to the biggest percentage changes. Let's look at the day's biggest movers. And this is where you see the daily drama play out. On one end, you've got a company like UiPath just soaring an incredible 24% in a single day. But on the other end, the tech giant Intel drops over 7%. These numbers represent huge shifts in value and what investors are thinking, and it all happens in just a few hours. So what's the real story behind these huge moves? In section 4, we're going to look a little closer at our big winner and our big loser, and we'll use that P/E ratio we just learned about to see what it can tell us. Just think about this contrast for a second. If you're a UiPath investor, today was phenomenal. A nearly 25% jump is a massive surge in confidence. But if you're an Intel investor, seeing a 7.5% drop in one day for a company that big, that's a pretty painful loss. It's the perfect example of how quickly fortunes can shift on the market. Now let's use that P/E ratio to understand why things move so differently. Take a look at a high-growth company like NVIDIA with a P/E of over 86. Investors are willing to pay a huge premium because they're betting on massive growth in the future. Now, compare that to a stable company like HanesBrands with a P/E of just 5.5. Its stock is way cheaper compared to its profits. Now, neither one is inherently good or bad. They just tell two totally different stories about what investors expect. One is a story about future potential, the other is about present-day value. Okay, let's pull all these different threads together. In our final section, we're going to zoom back out and really look at the complete story this one table has told us. So, what have we actually learned from all this? Well, we've seen that the market has its giants like NVIDIA right alongside smaller players. We've seen how fortunes can be made or lost in a single day just by looking at UiPath and Intel. And we've seen that value is really in the eye of the beholder. A high PE is a bet on the future, while a low one is more about today's reality. This table, it's not just data. It's a snapshot of business, innovation, and honestly, human emotion. And that's the real magic of it all. This was just one day. Tomorrow, this table will tell a completely new story of successes, of setbacks, and of shifting expectations. The numbers always change, but the stories, they're always there, just waiting to be read. Thanks for cracking the code with me today.